channel. I'm Doris, and I'm here to share with you about the U.S. economic sanctions and the status of U.S. dollar as reserve currency. According to the latest data from the IMF, the U.S. dollar topped the global foreign exchange reserves in the second quarter of 2022, with a total of $6.65 trillion, accounting for 59.5% of the global foreign exchange reserves, compared with 72% in 2000. The dollar's share of foreign exchange reserves in central banks is slowly declining. Although the dominant position of the U.S. dollar in the international reserve currency has brought certain privileges to the U.S., it also interfered with implementation of its domestic policies and posed some threats to the stability of global financial market. After the World War II, the U.S. gradually established a highly developed capital market, a relatively free currency issuance environment, and a sound institutional system, which laid a solid foundation for the dollar as the main reserve currency. Since the first release of foreign exchange reserve portfolio data in IMF 1999, the U.S. dollar has always accounted for more than 50% of the global foreign exchange reserves. Although the share of the dollar is slowly declining, its dominance is still overwhelming given its huge size and network externalities. However, the epidemic and the economic sanctions of the U.S. accelerated the process of the decline of the share of the dollar in international reserves. Central banks began to increase their holdings of other currencies, changing the composition of currency reserves and using assets that replace the function of dollar reserves. In using the assets that replace the function of dollar reserves. In the fourth quarter of 2021, the dollar's market share in the world's international central banks fell to 58.8%, a 26-year low. Most of these official dollar reserves are held in foreign official and private investors in the form of U.S. Treasury bonds. The share of U.S. Treasury debt held by foreign investors has fallen from nearly 50% in 2015 to about 30% in 2021, equal to the proportion of Eurozone government debt held by investors outside the Eurozone, and higher than the proportion of foreign government held by the UK or Japan. Some of the dollar reserves also held by foreign investors in the form of notes, and the ratio of overseas dollar notes held by total outstanding notes had been slowly increased over the past 20 years. The Federal Reserve estimates that foreign investors held more than $950 billion in dollar notes at the end of the first quarter of 2021, or about half of all outstanding dollar notes. According to Colin Weiss, senior economist at the Federal Reserve, holding dollar reserves reflects two different preferences: political as the ally of the U.S. or international order, and economic benefits based on the U.S. dominance in the international trade and investment and the global financial markets, and the anchor status of the dollar. The international status of U.S. dollar is also reflected in its frequent use as medium of change in global trade and international financial transactions. Between 1999 and 2019, the U.S. dollar accounted for 96% of the trade settlement currencies in the Americas, 74% in the Asia-Pacific region, and 79% in the rest of the world. It can be said that excluding Europe, where the trade is dominated by the euro, the dollar is dominated in most parts of the world. For this reason, the U.S. dollar is also dominant currency in the international banking industry, with about 60% foreign currency deposits and loans dominated in U.S. dollars, and the proportion has been relatively stable since 2000, much higher than Euro's 20% share. The dollar also maintained a high share in foreign exchange trading. According to the 2022 three-year central bank survey, U.S. dollars account for 88% of the global foreign exchange transactions, compared with just 31%. Each foreign exchange transaction involves two currencies, so the total percentage is 200%. The dominant position of the euro-US dollar in the international currency has brought a certain privilege to the United States. The US can borrow from the world at low cost with its unique currency reserve position, obtain automatic insurance by running the current account deficit, and rely on the special position of the dollar in the global payment system to impose financial sanctions against other economies. While the US dollar, as a major international reserve currency, also has many problems. First, it interferes with the implementations of US domestic policy. As the issuer of the international reserve currency, the US needs to continuously absorb global surplus and savings to maintain the status of the US dollar, while the strong US dollar undermines US exports, which puts a large burden on the US domestic economy. The IMF estimates that the U.S. overestimates contributed 1.8% to U.S. current account deficit in 2019, compared with the more normal level of the current account balance, and that the continued over-evaluation of the exchange rate has a restraining effect on domestic employment and economic growth. In addition, because the dollar reserve asset supply depends on the U.S. government debt insurance, the solvency depends on the dollar asset value. At the same time, the U.S. cannot completely rely on the inflation of debt monetization, its foreign debt repayment, and the contradiction between asset quality. The new crown outbreak is the COVID-19 outbreak is to strengthen the paradox. After the outbreak of the epidemic, in response to the downward pressure of the economy, U.S. implemented a substantial quantitative easing policy, which led to high inflation in the dollar, the rise of the government leverage ratio, the decline of intrinsic value of the dollar, and the doubt of the status of the dollar. From an international perspective, the non-diversified structure of foreign exchange reserves also causes global financial risk. This is mainly reflected in the fact that when all countries use U.S. dollar as the main reserve currency, once a more extreme monetary policy appears in the U.S., it may have a huge impact on the entire international market. For example, the U.S. implemented a series of interest rate hikes last year, leading to serious foreign exchange stress and debt crisis in many emerging market countries. After the 2008 financial crisis, the U.S. implemented a relatively loose monetary policy, leading to excessive global liquidity. Against this background, many emerging markets and developing countries have borrowed a large amount of dollars-denominated foreign debts. The debt is relatively safe when interest rates are low and the dollar is weak. But once the situation reverses, the dollar debt burden of these countries becomes extremely heavy, and the probability of a sovereign debt crisis will rise. In addition, due to the impact of COVID-19 and the conflict between Russia and Ukraine, the global economy itself is facing a downward pressure of the growth rate. Once all countries tighten their monetary policy again, the global economic recession is inevitable. Of course, the existence of this defect is due to the non-diversified foreign exchange reserves. No matter which currency assumes the function of the international reserve currency, it will inevitably bring about such problems. The development and characteristics of the economic and financial sanctions in the U.S. U.S. economic sanctions are restrictions on trade, investment, or other economic activity. Economic sanctions have the political color of power, usually initiated by countries with strong economic strength to countries with more fragile economies. The specific measures include trade sanctions, investment sanctions, aid sanctions, freezing of overseas assets, etc. According to the Global Sanctions Database, the U.S. was the leading sponsor of sanctions over the past 70 years, with more than 35% of the world's sanctions between 1950 and 2019. During the Cold War, the U.S. economic sanctions were divided into two main categories. One is sanction countries with different ideologies. The other is undirected to its allies to achieve specific diplomatic, political, and economic demands. After the end of the Cold War, the process of economic globalization and international market liberalization was continuously deepening, and all countries began to focus on economic development. With the rising importance of economic factors, so does the number of U.S. sanctions in the trade and the financial sectors. Today, the economic and the financial sanctions of the United States mainly show three characteristics. One is that although the frequency of sanctions has increased, the number of sanctions targets has decreased. A more precise target of sanctions means that the conflict may be transformed from the entire country to sanctions against individuals or organizations. Second, the means of economic sanctions are more diversified, from the former trade sanctions to the use of financial and trade sanctions. Third, after decades of development, the U.S. has a relatively complete legal system and operation mechanism for sanctions. This allows the U.S. to have a specific resolutions and bills to impose economic sanctions, even if they may be made for specific countries. By adopting a series of economic sanctions, the United States exerts multiple pressures on its target countries and weakens the strength of its competitors. But such behavior above international law has also been condemned by the international community. The impact of economic sanctions on the status of the US dollar as a reserve currency. Since the collapse of the Bretton Woods system, the dollar's currency status has no longer been supported by a forced binding to gold, but its own credibility. Therefore, the credibility risk caused by the economic financial sanctions of the United States also endangered the current currency status of the US dollar. After the conflict between Russia and Ukraine, the US and its allies responded with economic sanctions. First, the U.S. Treasury Department imposed a total sanctions on Russia's four major Russian banks, freezing all assets related to the U.S. financial system, and limiting the ability of the Russian Federal Savings Bank to engage in cross-border activities through the U.S. financial infrastructure, cutting off the Russian government from global financial system. Second, the G7 has imposed joint sanctions on Russia's central bank. Americans are banned from any transactions involving the Russian Central Bank, the National Wealth Fund of the Russian Federation, and the Russian Federal Ministry of Finance, including the European Union, Britain, Canada, Australia, Japan, South Korea, Singapore, and Switzerland. The bans directly froze nearly half of Russia's central bank's $643 billion worth of assets, weakening the Russian government's ability to use its reserves to keep the rupee stable. At the instigation of the U.S., the European Union has also moved to exclude 7 major Russian banks from the Global Interbanks Financial Communication Association (SWIFT) payment system. A series of economic and financial sanctions against Russia, while forcing Russia into the brink of debt default, break the principles of sovereign equality and property rights protection, also damaged the credibility of the U.S. financial market. In the future, more countries may consider diversified allocation of reserve currencies. Reserve currency is used internationally for pricing and payment settlement. The reason why central banks of various countries widely use the dollar as reserve currency because the strong ability and liquidity of the dollar. But when the dollar is repeatedly used as a weapon, and thus lose its stability, governments will consider reducing the proportion of the dollar in their reserve currency. In recent years, central banks around the world have been slowly optimizing the structure of their foreign exchange reserves, with dollars still declining at the pace of emerging market central banks in diversifying their reserve currency is accelerating. The IMF, according to IMF. Russia, the key target of U.S. sanctions, began de-dollarization of its reserve currency several years ago. Data from central banks has cut its dollar reserves to 16% of its total reserves in 2021, down from 40% 4 years ago. In addition, Russia held just $3.9 billion in U.S. government bonds at the end of 2021, down from $176 billion in in 2010, and now holds just 2.2% of that in 2010. Many countries also consider de-dollarization in international transaction on settlement and means of payment. Some oil producers, such as Russia and Iran, are actively exploring the use of other currencies or packages of currencies for oil metering to undermine the dollar's dominance in the global oil market. In terms of payment means, the rapid development of new currencies such as digital currencies and cryptocurrencies of the central bank also provides more diversified and efficient ways for international payment. Outlook for the dollar's reserve currency status. In short to medium term, the dollar's dominance of the reserve currency remains unshakable. The size of reserve currency is the concept of stock. At present, the dollar still accounts for more than half of the foreign exchange reserves of central banks around the world. It is not overnight to replace all or most of these dollars into other currencies. In the long run, the U.S. international status will be even more challenging. As a huge economy with both developed financial markets and free trade environment, the Eurozone will be one of the threats. European integration is likely to accelerate through the infrastructure of the EU sovereign debt market and the introduction of digital euros. Another challenge for the U.S. dollar's dominance is the continued rapid growth of China's economy, in which PPP calculations put China's GDP above the US as early as 2017. At the same time, changes in the payment pattern will also have a certain impact on the status of the dollar. For example, the rapid growth of digital currencies can eliminate some of the inertia generated by the dominance of the dollar. In this context, the continuous economic and financial sanctions imposed by the U.S. will weaken the dominance of the U.S. in the international financial market, promote some countries to accelerate the removal of the dollar, and build a more diversified foreign exchange reserve structure. However, due to the different political stance, economic conditions, and risk perception sensitivity of different countries, it is still impossible to predict how long the de-dollarization cycle will be. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.